Hello friends, my name is Pinaki and welcome to my channel FinTech Logics. So today we will talk about embedded finance, which is an application of open finance. Now, if you have not seen my earlier videos on open finance, I'll provide the link here. Please have a look for the detailed landscape. So, at for the sake of this video, you understand that embedded finance is an application of open finance where a non-financial or non-banking player can initiate financial transactions. So there are multiple use of open finance, and if I can summarize that, so there are around five main areas where this is growing at a very rapid rate. Now let's look at each of them one by one, how they are growing. So the first one is about embedded payments. So if you say embedded payments, you would have heard about players like Uber or Google Play or Apple Play. So initially they were not financial institutions when they started, but what they facilitated is that, for example, a Uber customer after availing the car can initiate payments from Uber without the need of going to ICICI Bank, right? So they leveraged key USPs like your security and user experience to facilitate all these transactions, and this is growing at a very rapid rate. Now, the second set of development or business model is about embedded lending. When a customer walks into a point of sales, and because the merchant gets a lot of boost in their sell, and even the turnaround time for the borrower is less, so this becomes a win-win for both your customer and the merchant, and they are promoting with this with a very high amount. So that is why you would see players like Klarna and Lendflow are actually bridging this gap and growing at a very rapid rate, providing a seamless journey to the customer. Basically, these are all low and mid value loans. Now, the third one we have already discussed is about BNPL. So, as we all have seen, so players like Capital Float or Amazon Play or Lazy Pay are actually providing a lot of BNPL loans, leveraging the USPs of turnaround time to be made very less, and sales, and even promoting different kind of schemes. The next one in this aspect is about embedded insurance. So by this what I mean is that these are non-insurance app. So let's say like your Walnut, or sometimes your motor vehicle apps, also motor servicing apps. These are also initiating insurance for the customer. Think of a scenario where you would work onto Walnut for your transactions to be shown in a correct way, like in your income and expense, and that can give you insurance quotes. Like, so for example, if you go to a motor servicing company and book an appointment, and they can also initiate your your motor vehicle insurances through their app, right? So all these are actually embedded insurance. The last but not the least in this segment is about embedded investing. So nowadays you would hear about players like your Drive Wealth or Stash or even Accord or Robinhood. So these are actually embedded insurance, embedded investment apps, so that can offer multiple assets to the investors, like your stocks, ETF, mutual funds, etc. And why they are growing? They are growing because of they provide a very seamless journey in terms of user experience. They are very simple to use, and they also provide lot of investor training. So, leveraging the concept of open finance, these are the five business models. Those are growing across the globe at a very rapid rate. I hope the business models have made the overview clear in your head about how open finance is growing in different market segment. So please do share, subscribe, and like for more such content. Thanks a lot, viewers.